The National Grid has said that more investment should be put into the UK's gas industry, which could turn public companies and investors toward this part of the energy sector. According to the Future Energy Scenarios report from the National Grid, if there is no more investment in shale gas, then the UK's reliance on imports for fuel could rise to 90%. This would leave businesses and households alike at the mercy of global prices to acquire their fuel. The report comes at a time when there is growing concern about the energy security of the UK. It is predicted that the spare margin between supply and demand will narrow to roughly 2% around the middle of the decade. However, if shale gas were to receive more investment, then National Grid says it could account for around 41% of the UK's needs for gas by the year 2035. At present, energy companies who have been involved in hydraulic fracturing for shale gas are only at the exploration and testing stages, so the results from National Grid are only based on one possibility. To build the scenarios in the report, it draws on a number of trends that make up the landscape of the energy sector in the UK and where the country gets its fuel from. The report looks into a range of factors including political, technological, economical and social. Based on these, it studies where energy will come from over the next 20 years and how it will be used. Its no progression scenario is based on if the UK faces a slow economic recovery and does not follow targets for increasing levels of renewable energy. As the supply coming from oil fields in the North Sea are slowly dying down, shale gas has been looked to as a means for replacing this fuel. This story was brought to you by QBE, the business insurance specialist.